hello to all of you on Facebook. And hey, everybody on YouTube, nice to see you here. For those of you on Facebook, that's backwards. That's not even going to work. That's not going to work. Is it fine on YouTube? Nope, it's backwards on YouTube as well. All right. Well, hey, everybody on Facebook and on YouTube, nice to see you here this morning. I'm also over here on a webinar with my mastermind members, but I'm making this webinar public so that if I have internet problems, everybody can see me and hear me okay. And I want to welcome you here today. We're going to talk about drawdown. It's all backwards. These are meaningless. I have these things up, everybody that can't see me. And I had these cards written with the subject of today's presentation, but that's not going to make any difference. Welcome to everyone that is here, and welcome to those of you that are joining me for the first time. Super happy to spend some time with you, and welcome. All right, we're going to talk about drawdown today. We're going to talk about the process for dealing with drawdown. And right now there are some pretty hefty trends beginning in the British pound. Donald Trump recently said that the dollar might be overvalued, and so that caused some concern. And my friends and I trade a robot called the Finch. This is my monkey friend over here. Monkey doesn't trade the Finch. There's the monkey. And in this robot, we hold on to small losing trades, and we don't close those out immediately. And for those of you that are inside the webinar here on the computer, you already know that. You already know that this is what we do, and you already know that we hold on to small losing trades. Well, you also know that when you hold on to a losing trade, you're breaking this giant myth/rule of trading, which is never hold on to your losing trades. So let's have a conversation about what drawdown is and why it's important to have this conversation right now. And welcome to all those of you who are joining us from all over the world. I'm really glad to see you here. What is drawdown? Now, for the purposes of this presentation, drawdown is the total amount of loss in the positions that we're holding on to in our losing trades. And so of course, once again, we're going to get into it in a minute. Maybe you don't hold on to your losing trades, but eventually, because there's a flash crash and your broker can't close your trade or some other reason, we all eventually, at some point in time in our trading career, will end up with some trades that we're holding on to that are losers. And I'm going to read to you a little quote from this book, The Beginner's Guide to Zen Buddhism. For those of you joining me on the webinar for the Mastermind, this is a book by Gene Smith. And on page 105, and I'm going to read to you from page 105 here. The first noble truth of Buddhism is that dukkha, I don't know if I'm pronouncing that correctly, is the intrinsic nature of existence. Okay, so that's often translated as suffering, dukkha, that it's a part of existence is suffering. That's pretty depressing. Like, wow, that's pretty depressing. Dukkha is the quality of dissatisfaction, discomfort, and impatience. And that's part of our everyday life. Especially if you are a Finch trader, or you're trading a robot that holds on to small losing trades, dissatisfaction and impatience becomes a part of your life. Think of it as an imperfect space at the center of the wheel where the axle goes. Imagine you have a supermarket cart, right? And it's got that clanking wheel, clank, 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 and it's just driving you bananas as you're going through the supermarket. That's the quality of this suffering. Just you're impatient, you're a little bit disappointed that you pulled that cart and held on to it. And for some people, that suffering is horrible. It can be something much more significant than a wheel on a shopping cart not functioning properly. For some people, it can be disease or sickness or, God forbid, some kind of tragedy. And for others, like us, it could be something in the middle, worse than a shopping cart wheel that's clanking and not as bad as a disease or some other kind of problem. And that could be an open drawdown, the total amount of loss that we're holding on to in losing trades. And it's depressing, it's unfortunate, we don't want it, but sometimes it happens. Sometimes it happens on purpose. Like for right now, for instance, I'm holding on to losing trades in my trading account. For those of you that are in the webinar and you're Mastermind members, we're going to look at my trading account right here for a moment. Today I had a $531 day that we'll talk about in our next webinar on Thursday for members only. But I had a big day today in my trading, but I also have $14,000 in drawdown. Now I have a $156,000 trading account, and that's not really a big deal. 10% drawdown is not really a big deal. But there's this quality of suffering, right, that we're all somewhat familiar with as traders, there's this quality of impatience with these trades and disappointment that I'm holding on to these trades, and I wish that these trades didn't exist or weren't here, or I wish I wasn't dealing with this kind of issue or problem. Thanks for all the hearts, Nimmer. It's nice to see you here. If you're watching on YouTube or Facebook, you could throw a like or a heart or whatever else you'd like to my way. That'd be great. I'd really appreciate that. Or you can tell us where you're from on Facebook or YouTube. We'd love to hear from you. There's this thing that happens in trading, whether you have a string of losses in a row and you're unhappy about that, or you have open losing trades that you wish you didn't have. It's just normal. It's a fact of life. We're going to have to deal with that. It's one way or the other, bad things are going to happen to traders sometimes. And so I'm here in my live account and I'm enjoying a significant amount of profit on a regular basis, at least compared to what I would have to work for previously in my life as a trader. But I've got these open losing trades and I don't like them. And you probably do as well. And on top of that, we're entering in on this period of time, this beginning of the summer. This is really spring still, but it's the beginning of the summertime, and we're about to get into some just crazy trends, like a giant bearish US dollar trend, or a giant bullish British pound trend, or an enormously giant bearish euro trend. And if you're holding on to losing trades in your Finch robot, or you've got an open set of trades on your discretionary trading account, or some other kind of situation going on, this is going to hurt you badly. Or if you're just a trader that has stop losses on your trades, and you are trading the euro, and suddenly, I don't know, 3 days from now, the euro just explodes into madness, and your stop loss is blown, and your broker doesn't honor the stop loss, and you're stuck in this giant bad trade, what the hell are you going to do about it? How are you going to deal with it, and what is it that you should be concerned about? So let's continue with this conversation and this presentation. I'm going to take a drink of water. While I'm taking this drink of water, if you're watching on the web, cheers to you. Cheers to you on YouTube and Facebook. Glad to have you here. Leave me a like or a comment and tell me where you're from and who you are, and would love to hear from you. And if you're watching on the webinar with the Mastermind members, I'm just going to take a drink here, and then we're going to get this party continuing. All right. So one of the first comments I get when I talk about drawdown or open losing trades is I get this comment that says, wait, shouldn't I be closing my open losing trades? Isn't this horrible that I've got these open losing trades right now? Like, isn't that the worst thing that I could ever have? Yes. You don't want a lot of open losing trades. You do not want that. That's absolutely true. I have no disagreement with that whatsoever. Monkey, what do you think about it? Meow, meow. Or how does it Curious George go? Moo. I don't know how Curious George goes. Banana. That's a minion. Anyway, we should be closing our losing trades. That'd be great if we could close our losing trades immediately or never had any problems. But for some of us, we got stuck in a bad trade and we're paying some swap or interest, or we're just dealing with the trade. We're just not happy. So what are we going to do? Well, most people will look at the number, like the actual amount of money. What's a bad, and they'll say, how much money is too much money? How much money is too much money to be losing? What's my open percentage drawdown? And that's the number that people will focus on. But the fact of the matter is you're never really stuck in a trade, right? You can close it any time you want. And that's not the point. The point isn't, hey, what's my open amount of lost money? That's not actually the most important question, because it could look like a big number, like $10,000, or it could look like a lot of trades, like 8 trades or something like that. Or you could have had, I don't know, 6 losses in a row recently, and you might be concerned about that, and you might be like, I'm freaking out. But that's the wrong question. The right question is, what's your margin level percentage? Now, a lot of you may not even know what that margin level percentage is. I'm going to look at 2 trading accounts on my MetaTrader account. And for those of you in the webinar, you can see these 2 MetaTrader accounts. Number 1 is my primary trading account that I use for accumulating income, and I'm up to about $1,000 a week, and I'm on my own journey to $1,000 a day, along with some of my students that are already at $1,000 a day. And that margin level percentage in that account is 393%. That means that I'm well above the spot where my account would ever margin call. I have plenty of margin relative to the number of trades I have open and the amount of open losing trades that I have. Okay, it's pretty safe. A number over 300 is reasonably good, but it's not really good enough. Let's take a look at my other trading account. In this trading account, I have $17,000, and my margin level percentage is 1,444%. This means that the risk of me getting a margin call is practically zero. There's almost no way that I could have a margin call. Why do I say this to you? Why am I talking to you about this in terms of percentages and math and all this other crap? The answer is this. It's not about the amount of money that's lost in your account right now. It's not about how many dollars are open in losing positions. It's not even about the size of your losing trades. It's about your margin level percentage. And that is one number that tells you the whole story. And it tells you the story of how likely it is that you're going to get a margin call in a flash crash situation if the market moves a lot. So if you're using MetaTrader for your currency trading, you look down at the bottom of your screen, and it's in this bottom row, and it says margin level percentage. You look at that percentage, and you want that margin level percentage to be well above 300. You want that margin level percentage to be like at least in the 300 to 400% range. Now, if it's lower than that, that's okay if you're trying to grow a small trading account. Like, if you're trying to grow a small trading account, you might be taking larger positions. You might be trying to grow it rapidly to try to get up to a certain amount of money, and that's totally fine. I completely understand that. That's a somewhat absolutely reasonable thing to do. But once you start trading for a while and you've grown your trading account a little bit, you want to get your margin level percentage up into the 600% area, the 700% area, the 1,000% area. That's where you want your margin level percentage to be, as close as possible to 1,000% or 700% or 600%, because this keeps you from ever having to worry about a margin call. Alvaro says he has a 1,603% margin level percent. Usually it's 3,000%. So this guy's possibility of a margin call is practically zero. He's not going to margin call his trading account. That's amazing. But what about you? What if you're sitting there right now and you've got a bunch of open trades and your margin level percentage is below 500% or it's below 300%? Or what if, like me, mine's at 393%? That's kind of low. That's not a great number. If there's a flash crash tomorrow, that's not a great thing. That's a little bit worrisome. And I think it's something that we need to be concerned with. David says his margin level percentage is 117,000%. Joel, Scott, Bill, and others out there, that's the best margin level percentage I've seen. Robert says 365. If you're growing a small trading account, it's reasonable to have a margin level percentage that's like 200 or 300% because you're trying to grow a small trading account. There's no other way to do it unless you get aggressive. But as your account grows, like mine has, it's not a great idea to have a margin level percentage that's in the 300s. I'm now dealing with a margin level percentage that's, I think, maybe not where I want it to be. A little bit smaller than I want it to be. Now, my first goal as a trader is to keep my account open and avoid a margin call. That's my first goal. Isn't making money. My first goal isn't who the crap knows. Hey, Suresh, nice to see you. Suresh is at 994%. That's brilliant. Frank's is at 1,688%. I love these comments on Facebook and YouTube. Leave me a like, leave a comment. I'd love to hear from you. Mine's not where I want it to be. So what do I have to do about it? My goal is not to make money, and my goal isn't, I don't know, whatever. My goal is to keep my account open and funded and running. The monkey that laid the golden egg, right? There's the monkey. You can on Facebook you can't really see monkey, so there's monkey. So the goal is to keep the account going. The second goal is to keep as many currency pairs running as possible. To keep as many currency pairs open running on the Finch robot as we can. That's the second goal. Those are the only two goals. I need to do something about my trade. So let's take a minute here, and I'm going to share with you what I've started to do and what I'm going to continue to do. And on Thursday, we'll come back for Mastermind members, and we'll probably we'll get into some charts and other stuff like that. If you're not a member, you can, I don't know, click below on Facebook or YouTube. Those links aren't here if you're watching live, but I'll throw those in later. Okay. Here's what you got to do. If your margin level percentage is below 200, for example, and you are worried, as you should be, and you're running a robot like I am, or you're just worried, you have to do one of these 3 or 4 things. Number one, you need to close some trades. I need to close down some trades. I need to aggressively deal with the fact that my margin level percentage is not where I would like it to be. So I need to close some trades down. And in order to do that, the way that I would do it is spend 1 to 2 weeks worth of my profit in my trading account to close down some losing trades. I want to close down the largest number of losing trades that I can, because every trade that's open is costing me margin. Every trade that's open is costing me a deposit. Now that's the number one. That's the number one thing that I need to do. I need to spend some of my money to close down some of my losing trades. Now, if you use stop losses and right now you have no open losing trades, this isn't a concern of yours. But what would happen if you'd just taken a euro trade next week, and then there's some announcement that Italy's not going to be able to pay back his debt. It's debt, his debt. Italy's not a human. What if Italy can't pay back its debt and the euro drops 2,000, 3,000 points and your broker doesn't honor your stop loss? Congratulations, you're trading without a stop loss. In other words, no one's trading with a stop loss. That doesn't exist. That's a myth. Eventually, your broker doesn't honor your stop loss and you're going to have an open position that's a loss. What are you going to do about it? That's the question. The question isn't, oh, I'm smarter than everybody. I have a stop loss. Okay, congratulations. Next week, you might not. So what are you going to do about it when that happens? Number one, close out some losing trades and get your margin level percentage back above 500, 600, 700% if you can do it. Number two, if your margin level is at 400 or 500% in your MetaTrader, you might consider taking a third or fourth trade to get some of your trades out of trouble. Or if you get stuck in a flash crash situation and all of a sudden your account is just like rah, on fire or whatever, you might want to take another trade in order to help your other trades get out. So let's say that you're trading a system. Let's just say you do use stop losses, but the euro drops 2,000 points and your euro-yen trade is now negative, way bigger than you ever expected, and your broker didn't honor your stop loss and your trade's open, and there's no way to deal with that except for you either close that trade as we talked about, or what you do is you take a third trade or a second trade or another trade in the same direction as you took it to try to help that trade get out of trouble. I wouldn't recommend hedging. We can talk about that another time. I would recommend committing to the situation you're in and dealing with the problem that you're facing and doing something about it. And on Thursday, I'm going to show you the way that I did that recently on the Canadian dollar Swiss franc. For those of you in the Mastermind webinar here, when I finish on YouTube and Facebook today, I'm going to actually continue this conversation and we're going to look at the charts, and then we're going to come back on Thursday. We're going to go way deep into this. Alex says trading without a stop loss is not good. Okay, Alex, first of all, you're trading without a stop loss. You don't think you are, but you are trading without a stop loss. If there is a flash crash, you don't have a stop loss. And if your only comfort is that you put a number in your trading platform and you expect the broker to honor that, you have to be prepared for a situation where your broker doesn't honor it. And another thing, I'm going to go on a rant. Can I go on a rant? I'm not even going to ask for permission. Alex, there is no difference between you using a stop loss with some kind of position size that you have no business trading. And this is the big myth that all these educators and all these people who are promising you that you're going to make a ton of money, they're promising you that and they're saying, oh yeah, just use a stop loss. Trade a full lot. Use a stop loss. Everything's going to be fine. And then a flash crash comes and you have a margin call and I don't. And here's why I don't. Because I have a small position size. And that small position size is such that if the market goes haywire, I don't have a problem. But all these other people out here have been deceived by the trading education industrial complex. These educators out there that want to convince you that you can make a lot of money in a short period of time if you just trade with my system. And you're sitting in front of the charts for like 9 hours a day, and you're all like, I got a stop loss. There ain't no problem with this. I'm the smartest guy in the world. I paid $7,000 to my educator guy, and everything's going to be safe. And then the euro tanks, and you're like, fudge muffin! And you suddenly don't have a stop loss. And because your trade size was too large, you're not the smartest person. You're not as smart as you thought you were. And I'm trying right here to tell you the truth. I love you, man, Alex. I have nothing against you. All my trading accounts are public information. I'm not hiding anything from you. I'm not on this presentation to sell you anything. I'm just telling you the truth. That at some point in time, you think you have a stop loss, but you don't have a stop loss. No one has a stop loss. It just doesn't exist. It's not what's really happening. So Alex, I love you, man. And I'm sure your trading system's fine. So you got two choices. First choice is you close out those positions and you free up that margin and you get rid of some. You spend some of your recent profits and you close out those positions. The second choice that you have is to take a second or a third trade to help your bad trade get out of trouble. Those are the two choices that I think make the most amount of sense. But the other thing is, you might consider, if you're trading a discretionary trading system, if you're trading just like, and you have like 7, 8, 9, 10 losses in a row, and you've drawn your account down pretty significantly because you've taken consecutive losses, and your win percentage is supposed to be 80%, but suddenly your win percentage isn't 80% anymore. That's a fact of life. That happens to everybody. At some point in time, everybody's trading system fails at some point in time. That's another myth. The trading education industrial complex out there, like, they're going to teach you that they have, I got an 80% win rate or a 70% win rate. That's what they're going to teach you. But eventually that breaks down too. And so you're stuck and you're taking multiple losing trades in a row. And you might be thinking, I'm going to hang on to one of these trades one day. And then you're stuck in that trade because you don't want to exit it. And the temptation is to do number 3. There's number 1, number 2, and then you can do number 3. I don't know what that is. And that is to hedge your trade. Hedging your trade can be done, but hedging a trade is incredibly difficult. And hedging a trade just locks you in to a bad trade for an extended period of time. And unless you have a plan for getting out of that hedged trade, you can find yourself in deep trouble. So I'm going to give you one tip about hedging the trades, and then we're gonna sign off on Facebook and YouTube. And even that guy that told me to F off, we're going to sign off, and I'm going to wish you the best of luck in all of your endeavors. And obviously you're happy, and obviously you're living a great life, and you have time to tell that to me. Anyway, if you hedge your trades, let's focus on the topic at hand. If you hedge your trades, have profit targets on those hedged trades. If you're not subject to FIFO restrictions and you can trade in the opposite direction as your original trade, have profit targets on those hedge trades. Don't stay in those forever. Grab some profit out of those trades and spend that profit that you make reducing the size and reducing the position that you're in that's bad. Spend the money that you make on closing down parts of that position that's open and whittle it away. Gradually close that down. And I'm super happy to have spent some time. This was a picture that my daughter made for me, and that's a picture of my son, and this is my office, at least for the next few weeks before I move. I love you all. Thanks so much for being here on Facebook and on YouTube. Share it, like it. I'd love for that to happen. Leave a comment, at least a respectful one. So nice to spend some time with you here today. If you're on the Mastermind webinar, stay tuned. We're going to come right back, and I'm going to show you some charts. Bye for now on YouTube and on Facebook. Love you all so much. We'll see you later. All right.